Testing 1, 2. Testing. Testing. Testing.
Oswald.
1, 2, 3, 4, 5. So we got it now. We got a committee. Yeah, we're good. Let me close that door. This may be our last meeting. I'm not sure. We got one or two other things that are floating around, but right now we're working. Hopefully, we're trying to wrap things up. Today, we have a hearing. Representative Rhodes, why don't you come to the front here, boss? You want to sit here? You can sit right here. Be easier for you. Wait to stand too. Anybody you want to bring up with you?
I bet next door,
He come up.
we can call him up.
Yeah, we need to bring him up here. Put him up here. We can get him all online here. We got several other, y'all need to move down to different mics if you don't mind. Well, if you move over to number 2, if you don't mind. We've got another committee coming in, so we got to move this kind of fast. We didn't have a public sign-up sheet, but I will allow public to speak. We're going to be short on your speech. You got to keep it like 2 minutes or less if you don't mind. We got other meetings, and all of us got to be somewhere in other committees. So if you don't mind on this. And we did have a sign-up. My apologies. Thank you for thinking about that. And we have one person we'll talk to him, and anybody else who wants to come up. All right. What you need to do, Representative Rhodes, if you don't mind, is kind of walk us through the changes. We started with one bill, now we're stripping a bill and we're doing another bill. If you don't mind, can you walk the committee through the changes if you don't mind?
Yes, sir. Just to make sure, Mr. Chairman, members of the committee, thank y'all for letting me be here today. LC 550312S. Just making sure y'all got the right one.
Okay.
The old House Bill 84 is gone. And this is what we've got right here in front of us. And the language that we have right here in front of us is actually passed out of a House committee this year and actually passed out of y'all's this committee last year. And basically what we've done is we've made a couple of changes that makes it much better for the consumer. Line 5354 on the tipping, it is defaulted to stay at 0. And if they want to leave a tip, they can leave a tip, but it is defaulted at 0. And then on line 102, 103, basically the maximum charge that can be made is $5 per transaction. So we put a cap on that and then set the tipping at default at 0. And those are the 2 major changes that we've done with this bill, Mr. Chairman.
If you don't mind, Representative Rhodes, give us a little background on where this bill's come from, what we're doing here, so that
A
all
little
know.
brief description of this bill. Yes, sir. Basically, what this bill will allow is, think about if you're a waiter or a waitress, you pretty much go home with your tip money. You go home with the majority of your paycheck every day. And what this bill does is it allows other workers who get paid twice a month or monthly a chance to get their earned wages if they need to before payday also. And that's basically what this does. It sets that cap fee at $5 for them to be able to access their earned wages.
As I understand it, correct me if I'm wrong, if they take the earned wages out before a 24-hour period, there'd be no fee period, correct?
Some of the companies do not charge anything. It's kind of like what we see in Venmo now. If you Venmo the money and you wait the 2 or 3 day process, there is no charge. But if you want to expedite it, there is a charge. And some of the companies, Nick can go into this a little bit. Some of the companies do not charge, but some may charge to do it, and then some may charge to expedite it.
Nick, tell us who you are and tell us what you got.
Yes, Mr. Chairman, thank you.
Come close to that mic.
Thank you for having me today. Nick Stowell with Chime Financial. Chime is a fintech that offers basic banking services to over 375,000 consumers in Georgia. Most of those services that we offer come with no fees, so no checking account balance minimum fees, no overdraft fees. The next product that we're talking today that we're looking to get into is Earned Wage Access. It's a product that we know our consumers need because they lack access to short-term liquidity, and this allows them to tap into wages that have already been earned. As he mentioned before, this bill actually requires earned wage access providers to provide a free option. So all providers will provide a free option. Some, in our case at Chime, we charge a expedited fee of $2 if you want it instantly. If you want to wait 24 to 48 hours, you get it absolutely free.
This is not a loan. There's no interest accrual. There's no anything. It's just a flat fee if you want your money early that you've earned.
Questions from the committee? What number are you, 10, is that 10 over there? Two? You're on?
Well, appreciate you talking to me earlier. I finally got my hands on the right version of the bill. We
Really?
were talking about something that he's like, what are you
He
thinking?
was a little confused earlier.
It was.
So, appreciate you talking to me earlier, but, lines 53 and 54, we go on that just a little bit further. I'm just trying to, why is it even in there? The tipping part? A
Be-
tipper?
Because therefore it is defaulted to 0, which means if you wanted to leave a tip, you have to manually go in there and change it. It doesn't have it preset at $3, $4, or $5 for the tip, where you'd go back and have to change it to 0. It's basically starts at 0. And if you want to leave $1, $2, you can go in there and manually change that.
Okay.
Just to make sure no more fees are added.
Okay. I'm good.
You good with it, Senator?
Yeah.
Questions? What number you might, 5? 10?
Thank you, Mr. Chairman. Just follow-up question. So if I need $100 and I'm going to get paid next week and I need to buy a tire or something like that, I come to you, I get $100. You can charge me up to $5, no more. If I need it now and there's a ACH fee or some type of fee to move the money to me, then I pick up that fee.
So in Chime's model, I'll just speak for ours because I
Please.
don't know how all of them work. If you wanted access to the wages that you've earned and you
Yeah.
need $100 advance, we would offer you that $100 for free if you want to wait up to 24 to
24
48 hours. If you needed that second, it would be a $2 expedite fee, no other fees associated with that
So
whatsoever.
you pick up the whatever ACH, whatever, I mean, that.
Whatever it costs to move the
Okay,
money.
I got that. Okay. So then that fee, you make money by earning that whatever fee you charge, if any, and then tipping.
No, sir. Chime does not have a tipping model associated with our model.
So you just make money off the fee.
So Chime makes most of our money off of interchange revenue. So every time our customers are swiping their debit or credit card, we're just taking a piece of the interchange revenue that's going to the card processor. So we feel like Earned Wage Access, actually, we may even break even, if not lose money on the product itself, but it will attract more customers into our company to start using, to
So
bank
that-
with us and use their checking and savings.
So it could be a loss leader for interchange fees.
Yes, sir.
All right. Thank you.
Any other questions from the committee members? One more.
Provides oversight on this law. It's not the Department of Banking. Who would it be?
That's a good question.
So it's under the Fair Business Practices Act,
Yeah, I saw that.
which
Representative Rhodes will do that for you.
I mean, if there's a problem,
I was
who
going to
rides
defer,
herd
I was going to
who
defer to
rides
the
herd-
chairman of banks and
Thank
banking.
you, thank you.
Who rides herd over the industry?
I don't know the answer. Do you know?
I
y'all?
do not know the answer. No, sir. We'll have to try to find out.
yeah, I think I'll have to double check, but I believe the AG's office would have
AG?
authority over this.
Okay.
That would make sense, but
Right.
you know. What number you, Senator Dixon? 12? Go ahead, sir.
Representative, isn't it true that the Georgia Bankers Association, they're in favor of this bill?
That is what I've been told. Yes, sir.
Thank you.
Well, we fix to hear from them anyway, so we'll find out, Senator. We'll know for sure if they're here. Anybody else on the committee got any questions before I open it up for public comment? Okay, let's open up our public comment area here, and we got one person on the list here, and anybody's welcome to speak. We're gonna allow you to speak, make it sure. Y'all got to stay right there. They may have a question for you. We can't answer them. I know you got a function to go to. You gonna leave Nick in charge? Is that what you're gonna do?
We might.
I know you're in a hurry. Liz Coyle, am I right? Did I pronounce that right? Ms. Coyle, if you take the podium up there, please. Tell us who you are, what you're with.
Thank you. And I know you're in a hurry. I did have a handout that I gave Elizabeth that is a
Yes, ma'am.
summary of my comments. So I hope that.
We try to have have those 24 hours in advance. I apologize. I mean, it's
There's
just. it's just
so
too
little
much
notice
for
on
the
this.
Committee,
this
yes,
piece
ma'am.
of substitute legislation, but good afternoon, Mr. Chairman, members of the committee. I'm Liz Coyle. I'm the executive director of the statewide consumer advocacy nonprofit Georgia Watch. I'm here today to share my concerns about the House Bill 84 sub that you're just discussing. While we certainly respect Chairman Rhodes' intent to pass legislation that would protect consumers, we believe this bill would have the opposite effect. As Rep. Rhodes and the gentleman from Chime explained, earned wage access products allow consumers to obtain a portion of their hourly earned wages before payday, but they often come with exorbitant fees. Workers are steered into paying the voluntary tips, even if they are told that they can default to zero. The apps that are being used in other parts of the country have tactics to really push the paying of tips. While they can be, EWA products can be beneficial when properly implemented and regulated by the employer, non-employer integrated EWA models allow third-party companies to issue funds to be repaid later, usually through the employee's bank account. Direct-to-consumer fintech payday loans are not earned wage advances at all. They claim to pay wages but have no connection to wages or payroll and are repaid, like other payday loans, by debiting bank accounts. Repayment through bank account debit can also trigger overdraft for non-sufficient funds fees. By the way, the employer-based model that I described is already legal in Georgia. These are third parties pushing to legitimize their products here that we know have harmed consumers in other states. The HB 84 would allow EWAs to operate in the state without regulation by the Department of Banking and Finance, as you all just discussed. We're very concerned that we would have another small dollar lending debt trap offered to Georgians, not under the regulation of the Department of Banking and Finance that regulates the other small dollar loans. This would be bringing another risky car title loan type situation for consumers. These transactions, the people who take them out tend to be hourly wage workers living literally paycheck to paycheck. Sometimes that's 4 times a month. So if the consumer needs to borrow $100 or $80 is the typical amount they borrow, but they need to do it every time. They have to borrow again to pay off the previous loan. So for an average user, that could be $20 a month to borrow that original $80. And then they're caught in that cycle and it goes on and on. So you end up calculating the APR and it's well over the state's 61% usury cap on, for example, on installment loans. It gets over 300% interest very quickly. So we're worried that this is a way, Chime is one model. There are numerous models that would be allowed in this state. And there have been class action suits in other states where they really have harmed people. And Georgia is the only state that has a ban on payday lending, which, many of us fought very hard on 20 years ago to protect Georgians from payday loans. 2 states that have authorized this practice have allowed payday loans and APR 500%. Georgia does not, and we do not want to allow that to happen here in our state. So we think that now there is a version of this bill that was introduced last session in the House, and it did call that version that was introduced in the House last session, did call for regulation by the Department of Banking and Finance. So I think that's something that this committee should consider. There's legislation right now going in Maryland, it's also a payday-free state, and theirs calls it a loan, but will not allow interest to be charged on the loan and caps fees all in total cap of $3.50. And our calculations show that in order for this product to not be outside the state's 61% usury cap, the fee would actually need to be at $3, and that's $3 for the month. Not having these, not having a cap on the number of transactions, but just having a cap on the fee opens up Georgians to incredible risk to, having to pay to be paid, and they're already struggling to make paycheck to paycheck. And we just think this is a really dangerous product to allow in our state. So what we're asking you to consider is explicitly banning attempts to circumvent Georgia's consumer protections that would allow EWA companies to charge exorbitant fees. All products should be regulated as credit and comply with state consumer protections that prevent predatory lending debt traps. Also, the legislation should explicitly prevent debiting the user's bank account to recoup advance funds, which can lead to users incurring overdraft fees on top of those charged by the EWA servicer. I'm happy to answer any questions.
want to respond to that? Everything, or we got some other folks that need to talk?
Yeah, I'm happy to address the fact that earned wage access is not a loan. Unlike other loans, there's no interest associated with earned wage access. There's no recourse or collections associated with it. There's no credit check. It's simply not a loan. We're providing access to money that someone's already earned that's sitting with their employer, and they have to wait to access that for 2 weeks. And I guess my question would be where are consumers supposed to go when they need to access money when their bank account has gone down to zero?
Okay. Thank you, Ms. Coyle. We got to move on. We got to Zoom Alice Jacobson. Did I get that right? And you got to make it quick. Alice Jacobson
You
on Zoom.
did.
Are you there?
Yes, I'm here. Can you hear me?
Yes, ma'am. Please make it quick. Yes,
Okay.
ma'am. Please go ahead.
All right, I'm going to be extremely quick. I represent payroll professionals at Payroll.org, and we support this legislation because it identifies earned wage access for what it is, which is not a loan, and we appreciate that. Thank you very much.
That was very nice of you. Thank you kindly, ma'am. We have, I'm gonna murder this next name on Zoom. Y'all Vishai.
Not quite. Vidushi Dial, but
I didn't figure I had that. I was gonna murder. I apologize.
that's totally fine. Thank you for the opportunity to speak on the record regarding HB 84. On behalf of Chamber of Progress, a tech industry coalition promoting technology's progressive future, I urge you to support HB 84, which will regulate earned wage access. I'd just like to call your attention to a survey that was conducted by 3 EWA service providers, where an overwhelming number of consumers said they understood how the service structure worked and they considered it to be their best option for managing spending. EWA provides consumers the opportunity to stretch their dollar farther than the 2-week pay cycle. Families who work paycheck to paycheck are beholden to the 2-week pay cycle, and they're trapped in a system that does not account for real-life factors that won't wait for payday. With the right regulatory framework as outlined in this bill, EWA has the opportunity to make a great impact that meets the consumer where they are. So, like with other innovations in fintech, consumers can vote with their pocketbooks. And with all of this in mind, we encourage your support of this bill.
Thank you. And how do you pronounce your name, by the way?
Vidushi Dial.
Thank you for doing that. Very kind. Thank you for your testimony. Thank you. Okay, that completes our Zoom. Anybody from the audience want to speak? I know, Mr. Joe Brown, I think you were mentioning Senator Dixon's comments there about Georgia bankers or anything level?
There may be a little confusion. We have not taken a position on this.
Have not taken a position. Okay,
We appreciate being informed. but
thank you.
We have not taken.
Okay, no position. Anybody else in the audience want to talk before we close the public hearing? Okay, we'll close the public hearing. That's closed. Any discussion at the table here before we move? What number are you, Ms. Tanya?
Thank you.
Senator Tanya?
Thank you, Mr. Chairman. I know you responded to Senator Hodges, but what is the benefit of you being a providing these services to citizens? What is your benefit in it?
As far as from a revenue perspective. So as I mentioned before, we will offer a free earned wage access product. If you want it instantly, instantly when you press the button, you'll get charged a $2 expedited fee.
Okay.
So we'll make money off that expedited fee, but because of losses experienced in the program, we'll likely lose money based on the earned wage access program itself. The way Chime makes money holistically is through interchange fees. So as a consumer, when you use your Chime card at Walgreens, we're just taking a piece of that transaction that's going to the card processor. It's a small percentage, but lots of small percentages add up to a lot of revenue. So that's how we make our money. So products like earned wage access bring customers to deposit at Chime and then use our cards.
Okay.
I believe we've heard about interchange fees. So we kind of got that.
Yes, thank you.
Number 10. Guys.
That, Mr. Chairman, I would just say that I was in the banking business for a long time, and when I started, I was able to lend money to just about anybody that came in the bank. These were people I grew up with, people I knew, so I was able to tend to their credit needs, and I knew they'd pay me back because I knew them, I knew their character. I'd gone to school with them, I'd been in the community with them. But times change. The banking business has changed. for good. The banks can't handle credit needs for everybody. They used to could, they can't now. And there are different delivery systems for different levels of the ability to repay. And people still have a need for money. Some, as I mentioned earlier, somebody, I'm getting paid next week, but I'll lose a tire. And if I don't get my tire replaced, I can't go to work and I'm not going to get paid next week. So what do I do? And so the market is a wonderful thing. The market finds a way to give me what I need and to make a little money doing it, and everybody's better off. So I'm proud to support this, and if it's appropriate, I'll move to pass.
That's appropriate this time. Let's have a question. Second, we have a motion and a second. Any discussion? All right, number 4, Senator Halpern.
What's the role that a company plays though in this process, right? Am I determining as a company owner the amount of wages my employees can take up front, or is that determined by whatever provider is out there? And I know Chime is one of how many?
I'm not sure the complete number, but
Okay, but hundred.
no, maybe a dozen.
Okay,
To answer your question though, I'll speak to Chime's model. So we allow a customer to access up to 50% of their earned wages. So that, does a couple of things. One, it allows us to make sure that we're not extending all 100% of a customer's pay and then them leave and then we lose that money by not getting repaid. But also it stops a customer from withdrawing all their money so that when they get to the next paycheck, that there's nothing left there. So we allow the customer to access up to 50% of their earned wages. Other companies offer similar models, I believe.
but this bill defines no fees, it defines no interest, it defines tips have to be set to 0, but it doesn't actually define how much money a person can take up front. And I'm wondering why. Was that a kind of specific decision?
Well, each company has a different model. So there's no way to really do that.
So am I then to assume that the things that you've laid out here are the same across all the, there may be some fluctuations and differences between each company, but these things in this bill are the ones
Would
that
pertain
are
to each-
standard
Correct.
currently
They would
for
pertain
every
to each company that they couldn't charge them more than that with the no tipping and all that good stuff. That would pertain to every one of them. And then inside their own model, some may give 50 or 70%. I don't know that, but that would be up to the company that gives them the money.
Yeah, I think it depends on a company's tolerance of risk, right? So if they feel like they can give a customer 100% of the wages they've earned, that's the company's decision if they want to take on that risk.
This bill is set to protect the employee. Then the employer can do what they want.
Okay, so I just want to make sure I understand. So the things that are in here are already standard across most of the companies, the 12 or so companies that are in this business already, or not necessarily?
Not necessarily. Some charge more and some have more fees
Okay,
and that nature. We're
so we're setting a standard here,
correct.
but we're still allowing for flexibility for not the employer, but for the company to determine the amount of money that they're willing to give in advance.
That's-
So can I ask if it's standard for companies to set a ceiling?
Mhm. Is it standard for them?
Yeah,
I believe I can only speak for Chime, but I've heard other models do have a cap on the amount of money a consumer can access, but it's up to
And-
the company to decide that.
and when I say company, I'm actually referring to employer.
Oh, I got you. The employers, I do not, and so we are a direct to consumer model, so I don't know exactly how the employers determine that. But I guess the employer would determine how much the employee can access. But it's up to the EWA, the earned wage access provider is responsible for setting the amount a consumer can access per pay period.
Not to exceed the 50%. No,
That's Chime's model.
that's Chime.
That's correct.
Okay. Thank you.
Okay, folks, we got to move along here. We have a motion from Senator Hodges. We have a second from Senator Anderson over here. What's the will of the committee to move this forward? All those in favor of moving this forward, raise your hand, please. I have 1, 2, 3, 4, 5, 6 for those against moving this forward. 1 no. Your motion is carried. Who's going to carry your bill?
Chairman Dixon.
Senator Dixon, and you need to see rules as soon as you can. Get that to rules as soon as you can. Oh, notice. Okay.
Yes, sir. Thank you.
All right.
Thank you.
you.
Thank you, committee.
Anybody else have anything to bring to the Board of Banking Committee? Any members? Thank you guys for coming at a short minute. We'll adjourn this here. Thank you. No problem.